So let me tell you what happened in the crypto market this week. I'm sure you heard about it.
Yes, please, because I heard about it. I've seen memes about it. I just don't understand it.
Well, before we even get into the specifics of this year's meltdown, just people need to understand that there's a meltdown in cryptocurrencies just about every single year.
Mm,
Highly speculative. That's why I always recommend for people to, if people are going to get involved, only invest as much as you're comfortable losing. And I don't mean losing like 20% or 30%. I mean going to zero. So
mm,
that needs to be the lesson, because so that lesson was not taken to heart this week because there was a cryptocurrency or a set of cryptocurrencies that were working together to peg to the dollar that blew up, and then that is happening within this other macro cycle where the Federal Reserve is raising interest rates, and
mhm.
because of the way that the cryptocurrencies have behaved for the last, I think maybe after COVID, they've kind of followed the tech stocks. So interest rates go up, tech stocks go down, the stock market goes down, and then Bitcoin goes down. So we were already on a slump, and then this cryptocurrency se llama Luna as well as UST, and we'll talk a little bit more about that, about how they work together.
Mhm.
They crashed, which caused Bitcoin to crash as well, all the way down to 30 and then below 30 from, I think it was around like the low 40s. And then that in turn also caused all the other currencies to crash, which then um, caused the Luna and UST to crash even further. So it just became very cyclical. So a lot of people are hurting right now, and I also want to talk about that side of it, which is it's a different side that I hadn't really gotten into before, because apparently, because of what happened with this Luna and UST coins, complete meltdown, not lost 99% of its value. Apparently, there's a lot of people that lost everything,
Mm.
and up on the numbers that I was seeing today on Twitter were, some accounts were saying 8 people have committed suicide, and
Oh
others
my
were saying
goodness.
up to 15 now. So this is serious stuff, and there's a lot of memes, there's a lot of jokes, there's a lot of people that are kind of celebrating that this happened, because a lot of people called it a Ponzi scheme. But at the end of the
Hmm.
day, it's a lot of people that also lost a lot of money, whether or not they made the right decision, whether or not they were misled, whether or not they really knew how much they were gambling. That's, at this point, I mean, if you have people committing suicide, which means that it's pretty serious. You don't even know if eventually the government's probably going to get involved also, and try to come down with heavy-handed regulation to try to prevent these type of things. So
Hmm.
it's a lot that happened.
For
Um,
sure. And as we continue this conversation, my production team tell my production team here is telling me to remind folks that this conversation is not intended to provide any financial advice. We're just trying to give you all some insights into what happened, particularly you, because I think it's fascinating for me to understand a little bit more about what's behind this crash. Understanding too that just recently there was a pretty major investment fund that indicated that they were going to be offering options for people to put their retirement savings in Bitcoin, right?
yeah, Fidelity, yeah.
Trying to adjust to the trend, I guess.
Yeah, and when we talk about crypto, I think a lot of people out there would like to differentiate or distinguish between Bitcoin and then the rest of the cryptocurrencies, or alternative currencies, or as a lot of them refer to, shitcoins in a derogatory sense, because a lot of them are scams. At this point, there's about 19,000 total coins,
Mm.
and one way or another, some of them are small tweaks, some of them are just clones of other coins that are tweaks of them. They tweak small things, they tweak parameters, they have a different consensus mechanism, they have a different way of validating transactions. They claim to solve problems differently, and they claim that they're going to be more efficient or process more transactions than the other. But at the end of the day, they're all just making different trade-offs. Uh,
Hmm.
But you have Bitcoin that is the one that, as of now, really is the one that's really truly decentralized, that there's no centralized control. A lot of these other cryptocurrencies, the way that they started out is the founders had this initial coin offering where they raised a lot of money, and then they would allocate like 35% of the coin supply to themselves, and then the rest of it would be to distribute it out there and to put it into the market, and then to have it be out there trading. So you can't really call those decentralized. They're more centralized, but they pass themselves as centralized coins. So I don't know if you recall 2017, there was this huge crash. So a lot of the cryptocurrencies crashed as well. A lot of these altcoins also lost like over 90% of their value. Bitcoin also lost a lot, but not nearly as much as, like, it wasn't 90% of Bitcoin's value. And then eventually Bitcoin recovered, and a lot of these other coins also recovered as well. But in addition to the alternative currencies, there's these other type of coins that are pegged to the dollar. They're called stable coins. And the idea behind a stable coin is actually very simple. It says a lot of people, when they were moving their money to the exchanges, they would have the money sitting in US dollars, and then they could trade for like Bitcoin, and then they could buy something else. But then if you wanted to get out of the cryptocurrencies, you had to go back into dollars. So a lot of people, well, that's one of the reasons. So that's just one of the reasons. But there's other uses of the stable coins. But essentially, they created these coins, these crypto coins that were pegged to the dollar. So Tether, I believe, was the first one. So basically, what it says is you can trade your Bitcoin for Tether, and Tether is always pegged to the dollar. So it's like one Tether equals $1. And you're guaranteed, or the guarantee of the coin is that you always get that amount. And the way that they manage it is that, you know, the ones that back Tether, they have a lot of assets, they have a lot of collateral that they have available to them, so that they can control the price. So that if too many people are buying Tether and the price is going up, and it's going up higher than $1, then they flood the market with Tether to push the price down. And the same thing, if like too many people are selling Tether and the price is going down below $1, then they deploy their collateral to then go to the market and buy Tether, so it can push the price up. So they always want to keep it pegged to the dollar. So, you know, it fluctuates a little bit. It would go between like 99 cents, 99.5 or 99.9 cents, or $1.50. Like, it fluctuates, and then there's like an arbitrage opportunity too, where people can make money, and that actually also helps it stay pegged to the dollar. So there's a lot of mechanics for these stable coins, but the point of them is that it makes it a lot more, it's more convenient and easier for people to, you know, sell their Bitcoin and switch their money into Tether. Because now Tether, not only are you essentially holding dollars, but you didn't have to convert to dollars. You're still in Tether, and you can then send that Tether to any other exchange if you want to. So you could send that Tether somewhere else, and then you get it in your wallet, and then you can buy crypto or do whatever you want with it. After you get it, you can swap it for Bitcoin or whatever else. So it's really convenient, because it's like it writes the rails of the blockchain, so you don't have to go through the traditional financial system to send your dollars from one place to another. So coins like Tether, there's a few others, like Binance, the crypto exchange. They also came up with their own stable, the Binance USD, and then there's a few others. But then all of a sudden, like, people started supposedly innovating, and they're saying, well, what if we create our own stable coin, but instead of backing it with the traditional collateral like bonds or other assets, what if we just back it with another cryptocurrency? So this is where UST and Luna come in. And I'll pause right here, actually, because I've been saying a lot. Just, you know, give you a chance for any questions or any comments on this.
No, I mean, it's fascinating, because in some ways it's replicating the stock market, sort of the value a share, right? So you owe this coin that is tied to the value of this particular company or product. So in some ways it makes sense. And I'm also thinking that instead of going to New York to do programming, you should have been an investment banker, man.
No, I
Ruben,
think
el perro de Wall
yeah, right.
Street.
El Paisa de
Au!
Wall Street.
El Paisa de Wall Street. That would be awesome. With like your gallon hat, your
That
botas.
should be a movie, El Paisa de Wall Street. Yeah. So
In the next episode, we talk about El Paisa de Wall Street.
so let me tell you then about this UST. So it's the Terra Labs Terra Guard Terra Foundation Guard. I think that's what they're called.
Hmm.
The coin, it was UST. That's the acronym of the coin. And
USD or USDT?
no, not USDT, the UST. So USDT is another stable coin, but
Okay.
UST is the one that we're talking about here. And so what they did is, okay, we're gonna have this coin that's tethered, that's pegged to the dollar, and the way we're going to control the peg, or defend the peg, is that we're going to back it by another coin, se llama Luna. So Luna is just another cryptocurrency, or a shit coin, as a lot of people called it. And immediately you can start scratching your head saying, well, if UST is pegged to the dollar and you're not backing it with any actual treasuries or any actual assets, you're backing it with another cryptocurrency. Isn't that problematic? Because what's backing this Luna cryptocurrency? And so a lot of people had that same concern. It's like, hey, like you can't just back a stable coin with a cryptocurrency, because where does the cryptocurrency derive its value? Well, it's deriving its value from people buying it in the hopes that it keeps going up. So what happens? So you can make the case that there's no real asset backing it, because and then you can think about scenarios as like, well, what happens in the event where you lose the peg, and then the Luna coin also starts losing value, and then it's like it becomes a spiral, because if people lose trust in the peg, so like let's say UST is below a dollar, people start freaking out. What if then those that hold Luna start freaking out too, and instead of holding it, because they need to hold it so that you can then sell more Luna. Well, actually, I haven't really talked about the mechanism that they used to try to like control the peg. Essentially, it involved it's called this algo stable, which is supposed to swap the UST for Luna coins, and then burn Luna coins also if it needed to, in order to try to control the price of UST. So it was like crazy. To be honest, like 100%, I didn't really get into it too much to understand like all of the mechanics of how they were going to control the peg. And I was thinking it doesn't really matter, because apparently the people that created it didn't really understand that either. That's why it crashed and burned 99%. There were a
So
few
when you
people.
said
Yeah.
burn the Luna, you means like get rid of the coins that had been created?
Yeah, exactly. So you increase the supply or you decrease it based on what you think is needed in order to control the price of the UST. So you could always redeem UST for Luna, or the other way around. You could always swap them, but essentially you use the two worked hand in hand in order to control this peg. And so what happened with them is, at some point they also invested in Bitcoin. They said we're going to actually support what they called their assets, the assets that they have available to deploy in order to defend the peg. They purchased 3 billion worth of Bitcoin. So everything was going well. This Luna coin actually was $120 at its peak. And so everyone that got into it early, they thought they were geniuses making a ton of money. And there were a few individuals that I do follow on crypto Twitter that were sounding the alarm. And I was just thinking like, oh, what is this Luna coin? It sounds like just another, like a Ponzi, or another, the next hype coin of this season. Like SafeMoon was the one a few months ago, and then Dogecoin, and then Shiba Inu. It's like, I just thought this is the next iteration of it. So I didn't really pay a lot of attention to it. It's like I didn't even bother to like say, oh, I'm gonna go buy some. I was just like, whatever, that's just happening like in the sidelines. I'm not paying too much attention to it. And then when I heard that they were buying Bitcoin, I thought, that's interesting. They're buying Bitcoin, but Bitcoin has been pretty stable, but what if Bitcoin crashes, right? So what if we have a downturn? What's going to happen? So a lot of people were sounding the alarm, saying, hey, this, you could be attacked. Like somebody could try to intentionally make you break the peg, or somebody can find a way to attack you. But the owner of this, of UST and Luna, of the Terra Foundation, pretty arrogant guy, pretty cocky. He was even like daring the billionaires to try to attack his coin so that it would depeg. So then what ended up happening is, within the context of this whole macro environment where the Federal Reserve is raising rates, the entire crypto industry started going down. So, Bitcoin was already going down, because I think it had already gone down to like, it happened last week, but the latest round of when the Fed raised the interest rate by 0.5, some people thought they were going to raise it by 0.75, but they ended up raising the interest rate, the federal funds rate, by 0.5. So that kind of started setting the tone for the cryptocurrency, started going down, and Bitcoin went from like 42 to 36,000. And it was hovering around there. But then all these other alternative currencies were suffering a lot too. And then all of a sudden, UST, it lost its peg. So instead of being somewhere like 99.7 or 99 cents to the dollar, it went down to like 98. And then all of a sudden, everyone on Twitter was like, "Oh crap! It lost the peg. Here we go. What's gonna happen now?" So what happened is, it just became a downward spiral, because it lost the peg, and then the value of Luna started going down too. And then they had to deploy their Bitcoin reserves. They sold all their Bitcoin to try to control this peg. So essentially, to try to go into the market and make the price of UST go back up. So that caused the price of Bitcoin to go down to like 30. And then it became like a contagion effect, because then when Bitcoin goes down, it drags the entire sector with it. So then the entire sector slumped down even further, which made people lose more confidence in UST and then in Luna. And then you could also, I think a lot of people are claiming that it was actively being attacked. So like a huge player was like selling a lot of it to make the price go down, which, it's possible, but they just didn't have enough funds to draw from, basically, to defend the peg, because their collateral was, well, not really collateral, but what they were using to try to tap into funds. It's like, okay, they used all their Bitcoin, but that tanked the market even further. So it affected the Luna coin, and then the Luna coin lost value. So then Luna started losing even more value, and then UST kept on going down. So at some point it went down to like 95, and then people probably thought, okay, it's still going to recover. And then UST went down to like 68, and then 50 cents. And all the while, the Luna coin keeps going down too. It like, at some point, it lost like 99% of its value. It went down to like $1, under $1, within like a span of 48 hours. And then it's crazy, because at that point, a lot of people were like, oh, this is a good time to buy now, because, we're buying the dip. You're getting Luna for cheap. We're just going to buy a ton of it. And after it went under $1, it still lost like another 95% of its value. So if you were to look at it right now, I think the Luna coin is trading at like a fraction of a cent. It's like goodness. completely dead. There's no way that they're going to bring this back. And then I think UST, the one that's supposed to be tethered or pegged to the dollar, it's trading at 10 cents. So UST at 10 cents and Luna at 0.0017. So complete, like, it's wiped out a whole bunch of people, even people that are supposedly like well versed in the crypto industry, that follow crypto, that track it, that make wise decisions. Like, there's a whole bunch of them that lost all their money too. So
wow. Yeah. So is this the end of crypto or what?
Yeah, I forgot. No, it's not. It's the end of Luna. I forgot to tell you one of the most important things. I mean, why would people buy this coin, right? Why would people invest in it? Apart from the fact that Luna was going up so high, is that if you purchase Luna and then you staked it, staking is you kind of like, you deposit your funds so that they could be used for like the validators in the approval of transactions in the blockchain. If you staked it through some protocols, I don't want to get into the whole DeFi staking, but essentially it was returning you 20% interest. So that's another reason why people were sounding the alarm, because they were saying, look, this is a very attractive interest, 20%, but it's too good to be true. It's not going to last. So a lot of people probably started out by just putting a little bit of their money into it, like maybe 10%, getting 20% in interest. And they're like, oh, this is good. I'm making a ton of money. Let me put in 20%, 30%, 40%. Let me put in 50%. And then they were making 20% returns for like a few months. I don't know how long it was, if it was like over a year. But you can kind of see how like people started getting comfortable and a little cocky, saying, oh my God, I'm making 20% interest. Let me just go all in. let me go all in on this because it's not going to, it's not going to fail. And then you have the main guy, I don't know if he's the founder, but the founder of Terra, and the main guy that's like the spokesperson or the face of this coin, being really cocky, saying, oh yeah, this coin is amazing, we're never going to lose value. So all these people, I think they put a lot of trust, blind faith in this guy. So they went in and they put a lot of money. So now they're just losing it. So this could potentially affect the ecosystem, in that a lot of other companies, if they were invested heavily in it, they could go down as well. But ultimately, cryptocurrencies, Bitcoin may still go down further. It may go down to 20, it may even go down to 15,000. But at least me personally, I don't see how it goes to zero, because it has value. There's value in being able to transmit value from point A to point B without an intermediate, without a middleman like a bank. And that value alone is enough to give the Bitcoin network like a specific value. I don't know if that's like 5,000 or 10,000 or 20,000. I don't think that really matters, because also since Bitcoin is like 21 million, they're never going to make any more, and then every 4 years the supply gets cut in half. It's somewhat like guaranteed that if it doesn't go to zero, it keeps going up. So I don't think we've seen the last of it. But a lot of these 19,000 other altcoins, that a lot of them are clear scams, I think a lot of people are probably going to be more wary about them.
Yeah, it sounds like the bust of the .com bubble.
I don't know if it's going to. It might spread like that. It might bring down the entire crypto space by another 30%. It's hard to predict, because sometimes then all of a sudden you get some news like Elon Musk fires a tweet that he's buying more Bitcoin or something, and then the entire space goes crazy again. Or the other thing that's very likely to happen is, the Federal Reserve is raising rates, but everything is really unstable and shaky right now. The housing, interest rates are really high. Houses are probably going to start dropping in value. You have the unemployment rate, you have oil prices, you have like so many different things in the economy that can break. So the minute that the Federal Reserve sees that things are getting kind of shaky, like they don't want to cause a full-blown recession. They just want to like slow things down a bit. But eventually they're going to go back. I've said this before. They can't raise interest rates. There's no way. The federal funds rate, there's no way that they can get that to like maybe not even above 2.5. There's no way they can get real interest rates, like mortgage interest rates, to like 7 or 8. They would crash the entire economy. So I think right now they're just pretending like they're going to fight inflation. And then eventually, once they see that things are getting a little too unstable, they're going to reverse course. And once they do that, then I don't know what's going to happen, but I imagine cryptocurrencies are probably going to shoot up again because of the specter of inflation. So I don't think we've seen the last of them yet.
Okay. But do you think that connection between the crypto, is there any connection between the crypto crash and the actual stock market? You talked about how it was tied to a lot of the tech stock.
Yeah, but
is it just limited to tech stocks, or you think it has a broader impact that, to your point, may have the Fed looking at, okay, how do we try to control the volatility caused by this cryptocurrency stuff?
Well, I think tech stocks are probably would be the most affected by high interest rates, because they're the ones that have benefited from an environment of cheap money. So, because there's a lot of tech companies that are operating on, they don't even generate profits, right? They just operate on a loss. They can tap easy credit lines, and a lot of people invest money into them. So it would be the tech sector that would suffer the most. I don't think that it's really Bitcoin that's affecting the tech sector. I think everything right now is tied to the government increasing rates, that pretty much the bond market. So that's what's driving everything else. And then they kind of mentioned the war in Ukraine, but that's really not. I mean, that's making things a little harder with regards to oil, because they're putting all these sanctions on Russia. But we were in trouble even before the Russia invaded Ukraine. So there's a lot of stocks like Coinbase. There's a lot of other companies that are directly invested in crypto uh, that would suffer as a result of a drawdown in the crypto sector. But for the most part, it's the tech stocks are more being affected by interest rates. But what happens is if the stock market falls because of tech stocks, and then that in itself, or just that the tightening of money could also affect other parts of the economy, where then you start getting more companies laying people off. And then if companies are laying people off, then there's like fewer people in the workforce, more unemployment. And then, depending on what happens with interest rates and mortgages, if the housing market slows down and houses are not going up anymore, then people can't refinance, people can't sell their homes. Maybe some people, if the price starts going down, people start going underwater. So it becomes a contagion effect also. It's just like a domino effect. So the Fed's trying to avoid a situation like that where everything kind of starts getting out of control. So that's why they're going to kind of like reinflate and make money cheap again, because I don't think we can sustain high interest rates, at least not for too long. So the crypto market's actually just like a small piece of it. Like this whole meltdown with Luna and UST, like, yeah, it affected a lot of people, but it was like a blip in the overall market, because crypto is just not big enough at this point to like bring down the entire system. It's Luna, it was big enough to affect the price of Bitcoin, but Bitcoin itself is not big enough to affect really like the overall market.
So we're not in too big to fail territory yet?
For crypto or for the overall market?
No, for crypto. I guess eventually we'll get there, right?
Yeah, if it keeps expanding. But the thing is that if Bitcoin does keep getting bigger and bigger, then it'll be harder and harder for it to have these wild swings, because it'll take more and more money to make it drop so much. So if it keeps growing, then it should get more stable. So anyway, you wanted to kind of just tie it back to Luna and UST. Again, I feel terrible for all of the people that lost everything. That you go on Twitter and you type in Luna UST and you hear all the stories of the people. And unfortunately, there have been some suicides, as we mentioned earlier. So that's never a good situation. So hopefully people out there, try not to blame themselves, because this really could have happened to anyone. It's a wild market out there in crypto. Just be safe. Only invest as much as you're comfortable losing. Like, that could be like 20% of your savings or whatever. Definitely don't get carried away. Don't get too comfortable with putting too much money in the market. I think if you start putting all your money in the crypto sector, and you start feeling pretty good about it, maybe that's the time when you should check yourself and say, hey, maybe I should step back a little bit and pull out some profit, so that if all this thing goes to zero, then I'm not left with nothing.
Pulling out and diversifying are always a good idea.
Yeah, just be careful with tech stocks too, because you never know what's going to happen. It all depends on the interest rates, really. It all depends on how much the Fed can actually increase interest rates before something breaks. But anyway, I think we can wrap it up with that. I think we'll definitely follow this. We'll check in on this to see how we're doing in a few weeks, and see if we're in the same place, if they've recovered, or if we've dropped another 50%.
Sounds good. Many thanks to the Paisa of Wall Street for helping us break down the Bitcoin situation.
All right. You all out there enjoy our content. Make sure to check us out. We are Brown Perspective. Nos vemos.
Ciao.